Welcome to TFN Smart Trading Action Alert. I'm Laura Cadden. In May, China's Ministry of Finance increased the stamp tax on short-term stock transactions from 0.1% to 0.3%. They intended to flush out the gambling element of the supercharged domestic stock market in Shenzhen, and especially Shanghai, the speculators and day traders who like to churn low-quality small and microcaps for quick profits. From a technical perspective, this was a perfect profit-taking opportunity for investors. But the mild drop in the index quickly turned into a panicked rout. Within 4 trading days, the Shanghai Composite Index lost over 15%. Is this the end of the Chinese stock market bubble? For some perspective, I've invited Taipan's executive publisher, J. Christoph Amberger. When we had him on the show last February, he recommended you play Aluminum Corporation of China, which went from below $26 to almost $35 without being affected by Shanghai's recent drop. His latest TFN hot stock pick recommendation, Chinese computer giant Lenovo, went from below $7 to $11 in just 4 weeks. So, Christoph, do you believe that this new stamp tax is really going to reverse all of the incredible advances that have been made in the domestic stock markets in China?
Well, Laura, government, central bankers, and economists like to think they can influence economic developments and market developments by their actions. Sometimes they actually succeed. But China has a certain tradition in exactly this kind of measure. We had the same thing happen in 1992 and in 1997. Look at the Shanghai Stock Exchange. It's about 10 times as large as it was the last time it was tried. So in my opinion, my chips will still be on the Shanghai Stock Exchange and a continuing of the stock market bubble.
So you do think the boom will continue?
I definitely believe so, yes.
So what are your reasons? Entirely?
Well, you have to look at it this way. The Chinese middle class likes making money, and they like making money on stocks. And they have just reached about critical mass in regard to their net worth to make that happen. If you look to Macau, for example, gambling is one of the booming industries in China now, and I'm not equating investing and gambling, but there are certain similarities here. You also have to see every month almost 2 million Chinese open new A-share trading accounts. Last month alone in Shanghai, in a limited area, over $3.3 billion were withdrawn from personal savings. That's 2.2 billion more than the previous month. All that money is going into the stock market on the hopes that even a modest gain on stocks will eclipse what they can earn on passport savings.
Well, clearly the Chinese government has concerns that the Shanghai market is in a bubble. Besides this new stamp tax hike, they have some other things they're emphasizing to control that market.
Yeah, I know you're thinking of the Qualified Domestic Institutional Investors Program, right. Which the Chinese government has developed to reroute some of the cash flows out of the overheating Chinese economy. Under that program, Chinese financial institutions are allowed to allocate up to 50% of their international investment quotas to equities funds that are regulated by offshore regulatory authorities. So that certainly will have an effect on the Shanghai market as well.
Now, Deutsche Bank estimates about $10 billion U.S. will leave the country over the next 12 months.
Yes.
Morgan Stanley is estimating $23.4 billion medium-term outflow. What does this mean for traders?
Well, for traders, it's the meaning is twofold. Number one, we will see a certain stabilization in the Shanghai market as some of the capital is drained elsewhere. We have been playing the IPO market in Shanghai through our ADR backdoor program in Taipan. We will see a separate track added to that mechanism, in that mainland Chinese companies who are not trading abroad right now will be trying to register on foreign stock exchanges like Hong Kong, like New York, and London, for example.
So would you commit yourself to a recommendation for our smart trading viewers?
So sure, it's a put up or shut up, isn't it? There are two Chinese solar stocks that just IPO'd on the New York Stock Exchange. One is LDK Solar, LDK as a ticker symbol, which IPO'd at $27 and has dropped down to 23 and change. The other one is Yingli Green Energy, YGE, also on the New York Stock Exchange, which IPO'd on June 8th and has dropped from about $11 to $10.
So you're recommending stocks that have actually plummeted since their initial public offering?
Well, but of course, these two stocks really IPO'd at the worst possible time. None of their doing, but they came out when the Shanghai Stock Exchange was dropping 15% and nobody was buying Chinese stocks. So we have, there was barely any premium attached to the IPO price, which means that most of the fast money is already out of the stock, and we may have another 10% downside on it, on both of them, but I believe we certainly have a 30 to 40% upside probably by November on both of these stocks.
Yeah.
So I would think committing a small portion of your speculative portfolio to both of these stocks is a good investment.
Oh, I think that'll do.
Okay.
The prices sound good. Thank you so much for the information.
You're welcome.
To learn more about J. Christoph Amberger's newsletter, Taipan, go to www.taipanonline.com. Please tune in next week for another profitable opportunity on TFN Smart Trading Action Alert. For TaipanFinancialNews.com, I'm Laura Cadden.